Hey guys, James White here at Bull Market Stock Trades. I have another video for you. If you've been following me, you know I've been talking about how to make money during stock crashes, stock market crashes, how to play the volatility of the S&P 500. So I'm going to show you how to do that, and I'm going to have to talk fast because I got to cram this all in 10 minutes. So this is a one-year view of the S&P 500. The S&P 500 is the biggest and best 500 companies of the U.S. economy. It's a good overall measurement of the U.S. economy and somewhat of the global economy. You can see that throughout the year, the S&P 500 went through many crashes. So yes, at the beginning of the year to the end of the year, you would have made money, but you would have watched your account go through these ups and downs. During stock market crashes, you hear about traders and professionals who multiplied their money and made thousands or millions during stock market crashes. So I'm going to show you how to do that. So this is the S&P 500, and the S&P 500 currently trades over $2,000 a share. This is an ETF that does the exact same thing as S&P 500. It's SPY, SPY, and this is trading at around $200 a share. I'm going to put this on split screen and show you the VXX. The VXX, also known as the fear gauge, which is the VIX, trades the flip side, the volatility of the S&P 500. So you can see up here where the S&P 500 started to crash and it came down back here in October, the VIX, the VXX, actually spiked. So if you were to take your money out, half of it, all of it, quarter of it, whatever you're comfortable with, of the S&P 500 here, and you put it in down here on the VXX and rode this spike right here. This spike came from $30 to around $44. This 2-week spike right here, each one of these bars represents one day. This 2-week spike right here would have made you more money than you would have made the entire year on the S&P 500. Now the reason that's powerful is that mutual funds, ETFs, IRAs, 401ks, all that retirement stuff, all that stuff is based off the S&P. It's all aimed to either match or outdo the S&P 500. So if you would have sold out here and bought in here in the VXX, rode this spike up, sold again, then brought it right back in here on the S&P 500 and rode this spike up, you would have multiplied your money many times over. You would have made money on the way down and the way up on a stock market crash. People have been doing this for many years, and it works out perfectly every time. When the S&P crashes, the VIX goes up. The S&P crashes, the VIX goes up. It works out exactly. So the key is trying to time this out of when to make the cross. I've got some technical indicators in here. These are the 10, 20, and 30-day simple moving averages. You can see here when the S&P 500 crossed my 10-day simple moving average, that was the first sign that it was going back up. Up here when it crossed, it was the first sign that it was crashing. When it crosses the 20, that's the second form of confirmation. By the time it crosses the third, you know it's happening. You know the S&P 500 is going up or it's going down once that crosses. So if you haven't made your switch by this third one, you are late in the game. Another good one is the MACD indicator. MACD indicator is probably the most popular one, most widely used one. So if you see back here and around September 10th, the MACD indicator, the two lines crossed. When the red line is above the green line, the stock is going up. When the green line is above the red line, the stock is going down. Over here, the S&P 500 was going up throughout August, September. September 10th, the S&P started crossing here on the MACD indicator, which marked the beginning of an inevitable pullback. Now, if we look at the VIX, also, the VIX started to make a cross right around September 10th as well, right here, which inevitably marked the beginning of a huge spike. And then right here, the MACD starts switching again, late October, and you can see the VIX started going down. Then you would have came right back over the S&P 500. End of October, you can see the same thing. We crossed, and the S&P came back up. So you can see how you can easily switch your money back and forth just using these simple indicators and multiply your money many times over. You'd literally make thousands and thousands of dollars, or if you're super rich, you'd make millions of dollars during this trade. And this happens multiple times a year. And we'll try to bring us to a present day view. This is a 2-year view. You can see right here that we're riding high on the S&P 500. We're starting to cross the 10-day simple moving average, and the MACD indicator is starting to close in here. We've got the same trade is starting to come back up. Whether this would be a small pullback or a big pullback, I'm not sure, but there is a pullback coming. It's coming. It's starting right now. It's going to happen. And you can also use trend lines. And these trend lines match right up too. I'm going to draw a trend line right across the peaks or across the highs of the S&P 500, and you can see we are right in line with the trend. So it's perfect timing. It's coming. It's happening right now. Why do these pullbacks happen? Let's see. Back here we were riding high. Maybe some bad news came out. Maybe Apple released the iPhone 5. The iPhone 5 was a flop. Maybe General Electric came out with some appliances that killed a couple people for some reasons. Whatever happened, the S&P took a small crash. Joe called his brother Tom. Tom told Marie and David at work, and David told his boss, who told his cousin. They all started telling each other that the S&P was crashing. Everybody starts selling. And people in Japan notice that this thing is crashing. They start selling. Everybody gets scared, and they sell, and the S&P crashes. And where does this stop? What is this bottom right here? This bottom is your average Joe. This is the guy who doesn't sell. This is the guy who puts all his money in a 401k for 40 years and does nothing. The crash stops with him right there. That's the bottom. And when that happens, professional traders see it. They see these indicators. They get back in, and they make all this money. So average Joe sat back, did nothing, made a little bit of money. Professional traders multiplied their money many, many, many times over. So hopefully you could grasp what I just put down. I went through that rather quick. I could go on for hours about this, but this play is starting. It's happening right now. So use the indicators, follow it yourself, follow the media, and see how you could use this to your advantage. Sign up for my future stock picks and lessons at www.bullmarketstocktrades.com, or inbox me your email address on Facebook. Thank you, and have a good day.